Welcome to the Family Office, planning for the people who matter most.
Speaking of money,
yes, great segue.
Speaking of money, the AI ROI myth that's happening and circling, and obviously Michael Burry has been a big call out. His biggest thing is that they just keep recycling the money, right? They keep self-feeding each other and cannibalizing each other by committing to buy chips and then committing to sell chips and then committing to buy compute power on those chips that we bought in this cycle and in this circle. And we've seen those types of things happen before. But the critics of Michael Burry argue that this is going to create massive economic outputs as a result. Where are you at with it, Len? Valuations are crazy right now. The market is throwing out these big numbers and is believing in this stuff. Jensen Huang just came out and said that we're in the beginning of the AI boom. We're not even, and it hasn't even started yet. And they've been hot for how long? NVIDIA's been hot for, so what say you on that, Len? Is it going to make money? Is it big money? Is it not going to make big money? Is it just another way, just another service? Are the cows going to come home to moo, the chickens to roost? Where are you at with it?
So I think the first wave of investors in SpaceX are going to get obliterated because the company is way overpriced, and that's starting to come down. In fact, the last I saw, the shares were down, 35-40%.
I haven't even looked at it.
It's been really bad. Like, they've taken major hits. Now, of course, they'd be dumb to get out right now. So if they have any brain whatsoever, ride out this massive downturn in valuation. But what's going on overall is those 7 companies, like, the FANG companies.
1985 as of today.
Yeah. So, that's a big difference. And so what's happening is AI and the tech bros have really over-evaluated the stock market right now. And so what's happening is, for whatever reason, the stock keeps getting propped up. And eventually what's going to happen is, every time when you had the dot-com burst and when you had the Great Depression and you had all of these different situations economically, what happened is the debt to GDP was way out of whack and the markets were way overpriced. And eventually there's going to be a regression to the mean. And when that regression to the mean happens, the retail investors are going to get screwed unless they understand how to ride it. And so Michael Burry is definitely eventually going to be right. I believe in his hypothesis. I believe that the stock market is overpriced. I believe that AI is overpriced. I think there's going to be a massive reduction, just like what happened with oh my gosh, starts with the Amazon. They lost 95% of their valuation, and now they're one of the world's biggest. And so I think there's going to be a major dip there. But of course, Jensen Huang's going to say everything's great because, being the CEO of NVIDIA, you've got to make sure that your shareholders have a massive amount of optimism. And so as long as people stay optimistic, the stock market's going to be fine, because as we both know, you can look at the financials, you can look at the year-end returns, you can look at the profits and all of those things. But at the end of the day, the stock market itself as a whole, it is based on emotion. People buy high and they sell low, even though we all know that you're supposed to buy low and sell high. They base it on emotions. And so with retail investors, eventually they're going to get wiped out. Especially when this major crash happens, I think, I'm guessing 27, 28, there's going to be a major market correction and people are going to fall by the wayside. Last point. If you take a look at Warren Buffett, what is he doing? He's got like $400 billion of cash that he's just sitting on. He's waiting for the blood to be in the street. He's waiting and he's patient. He's 95, 99 years old.
Some insane number.
He's just shy of 100, right? And he's been around. He's seen a lot. He's been investing more than most of us have been alive. And so I look at his clue and his actions and say, you know what? He's keeping his money out because he understands very clearly something's amiss in the stock market. And it's just a matter of time before the market corrects.
I don't think I'm worried about SpaceX. I think long-term SpaceX is a winner.
Long-term, it'll be fine.
I think it's bigger. I think anything Elon Musk is bigger than anything.
Did you jump in? Did you jump in and take any position?
I did it. I still hold it. I'm still holding it. And
you better.
And I'm not, I like the long game on it because I think SpaceX actually has a lot of tangible products. And I think where Elon Musk differentiates himself is that Elon Musk has a lot of, like, Tesla was genius. I mean, Tesla was such a genius move because he has such a cash cow with Tesla, and it's generated so much free cash flow because of, obviously, everybody wants electric vehicles, all those things. But what I do look at and I do worry about is I do worry about the companies that are like the cloud-based companies and the SaaS companies and the NVIDIAs, because what happens to NVIDIA if all of a sudden AMD or a competitor creates a chip or creates a platform that makes NVIDIA, that challenges NVIDIA's position? That company's dead, right? Like,
China's trying to do that as we speak.
You understand what I'm saying? So what happened? Like, what happens all of a sudden if TSMC, or not, but like a rival, like AMD? What happens if AMD all of a sudden cracks some type of code somewhere, and then all of a sudden, boom, they rival the foothold, the moat that NVIDIA has. See, that's the thing that I worry about with something like an NVIDIA.
Absolutely.
I'm trying to have this thing.
And then also with China, when you're looking at its position where they may try to take over Taiwan, what does that mean because of all the microchips that are manufactured there? And there's a lot of headwinds potentially that are in that await us in the near future, and I'm definitely concerned about it.
But I think too, what did you see this the other day, where I think S&P was like one of the only ones that didn't cave, and what basically is that, like, index funds and indexes, they normally there's a cooling period, like a 12-month or 6-month or something cooling period before you let IPO stocks and stuff like that into indexes, so that because that creates a lot of volatility. And now I think S&P was the only one that didn't cave, especially with SpaceX, where you have a lot of indexes that allowed SpaceX into these funds. So you're getting all that volatility. You're getting a lot of volatility in because you mentioned people could get wiped out. What you're seeing right now is a very dangerous thing, especially with the elimination of the PDD rule, pattern day trade. While I hate the pattern day trading rule, there are a lot of people that are in support of it, and I like it, if you know. But it just opens up a lot where, and here I am talking about regulation. I hate regulation, but you for the first time ever, you have a lot of retail where you can
because they had the $25,000 limit before, and now it's gone.
But not only that, you think you're investing in an index fund, which is safe, but it's got volatility now in it because you're allowing, and kudos to S&P. They're the ones who did. I want to say S&P didn't cave. They said, no, 12 months before we can allow this stuff in there. So if you look at, let's see here, the Mag 7 for the year, NVIDIA's up 9.1%. Amazon's up 9.8%. Tesla's down 14%. Apple's up. Apple's has been surging lately, 20% up. Alphabet's up 16%. Microsoft's down 18%, and Meta is flat. Those are your traditional high performers that have been for like the last 8 or 10 years or whatever. Right? And then there's a new core of them too with all the AI stocks. But
NVIDIA, Palantir, yeah.
So far, the market's crazy. It's still hot. It's still burning. Somebody sees something. But the key differentiator here that I see, Len, that I think is the quiet part, I hate that phrase, but the quiet part out loud is that you're seeing a lot of these AI companies rush to get IPOs now, right? And normally when you see a lot of companies like this rush for IPO money, it's because they've ran out of the private money, and they're needing this private capital, the private retail market to keep things going. And that's never a good sign. Because that's usually, like you said, the ones that get left holding the proverbial bag. So
what's going on with OpenAI. I mean, you're talking their income is like in the billions, and their expenses are in the trillions, and
it's so out of whack. It's so out of whack.
But all companies that have major infrastructure start off that way. That's no different than the car industry. That's no different than the internet. And again, the first wave of investors get wiped out, but then the second and third generation get to reap the benefits because that technology is undeniable. It's just, you've got to understand trends and you have to understand history to really understand that. And so, like for me, I'm waiting on the sidelines. I'm going to wait for the dip for SpaceX. And then that's when I'll jump in. But right now, I don't want to ride that wave down. So that's just me. No advice. That's just,
I like a little.
And the great thing about me and you is we both took different approaches. So that's good. So some of the audience may say, they're like, hey, let's think long term. Let's ride this wave down. And then you can also, as it's going down, do dollar cost averaging and just, keep buying a little bit here and a little bit there, because it's a good investment approach too. It's just, look, every time you get paid, every time you get a bonus, every time you get extra money, just put some in the market. And eventually the market's going to end up in your favor. And if you try to time it, no matter what, you're going to lose. You may get lucky a couple of times, but it's just long term, it's not a good bet. So just,
if you're going to play around, just be prepared to lose everything. I mean, that's really all there is to it.
Absolutely.
So, Len, enjoyed our afternoon. We'll see you next Monday. Until then, if you like the content, like and subscribe. We always welcome new additions to our group here. And if you have feel compelled to comment, we'd love to hear from you as well and maybe return some banter with you. Len?
Sounds good. Well, hey, looking forward to next time, Chris. It's always great to have conversations with you. Until next week, my friend, take care. Be safe.
Adios.
Conversation has given you clarity on your next steps. Please share this episode with someone who's walking the same path. Don't forget to like and subscribe so you won't miss future episodes. And remember, planning ahead isn't just prudent, it's an act of care. Thanks for joining us, and we'll see you next time on The Family Office.